Like Bitcoin, this week fell below $33,000 for the first time in around 12 months, and with Ethereum, ETH, and Cardano, ADA, also tumbling, the crypto market appears to be crashing, or at least going through a major correction. Given the old investment adage, buy the dip, investors may now be looking for a piece of the volatile crypto market, hoping this marks a temporary downturn rather than a long-term bear market. If you're thinking now is the time to buy, here's a look at previous trends, some expert opinions, and tips on buying if you're new to cryptocurrency. Significant losses. Month on month, the price of Bitcoin is down more than 20% to around $30,000 today. Back in November 2021, it traded for as much as $69,000. A more than 50% drop represents significant losses. Ethereum saw similar losses to Bitcoin over the past month, down to around $2,000. Cardano suffered worse, falling by almost a third. While this doesn't yet match the severity of the 2018 crash, in which Bitcoin lost 80% of its value, experts say things could still get worse for those left holding BTC. These losses have prompted the Indian finance regulator, the Reserve Bank of India, to repeatedly warn crypto investors. It says there are no guarantees of returns and that people should be prepared to lose everything they invest. Inflation, Downturn and War. Co-founder of India-based portfolio management services company, Upside AI, Kanika Agarwal, thinks the crypto crash has mirrored falling tech stocks. A large part of this is that crypto has gone mainstream, and the buyers and traders are treating it as yet another speculative investment. Therefore, it is falling like other growth stocks. She believes this is a good time for those who don't have any allocation to cryptocurrency to buy some slowly. As for whether this downturn marks the beginning of a long-term trend or a temporary blip, the co-founder of India-based crypto exchange platform WazirX, Nishal Shetty, says that while macroeconomic changes have led to a considerable drop in cryptocurrency prices, the crypto and regular financial markets are both experiencing a correction, which suggests that the cryptocurrency markets are maturing like other markets. Crypto has a bull and bear run. We are currently in the latter phase. Is buy the dip a good strategy? The principle of buy the dip is based on an assumption price drops are temporary aberrations that correct themselves over time. Dip buyers hope to exploit dips by buying at a relative discount and reaping the rewards when prices rise again. Crypto markets are volatile, so buying cryptocurrencies at any price is risky, let alone a dip that might become a long-term trend. While costs could return to previous levels, they could also fall further, leaving your investment underwater. If the past is prologue, then the current dip could bounce back as last year, when prices fell to similar levels before returning to pre-dip levels and even peaking in the autumn. But of course, they might not. Bitcoin prices, in particular, have shown a degree of seasonality to date, appearing to fall in value to lesser or greater extents in the spring before bouncing back in early summer. However, as with every kind of investment, let alone the unpredictable world of cryptocurrencies, past performance is no guarantee of future results. Praveen Kumar, the founder and CEO of Belfrix Group, believes these are significant entry levels for investors to build a robust portfolio in cryptocurrencies. In fact, investors should continue to buy the dip from here on as the long-term fundamentals of some well-known cryptocurrencies like Bitcoin, Ethereum, Litecoin, etc. are still reasonably strong. The founder and CEO of Muffin Pay, Dilip Saimbird, thinks otherwise. Regulations will promote the value of promising good projects in crypto, but we need to wait for a few months. The dip has always benefited crypto investors, but this time, it needs to hodl for a long to see the benefit, says Saimbird. Long-term investor always wins. On Thursday, Sumit Gupta, co-founder and CEO of CoinDCX, suggested investors hold on to their long-term investments if they have a firm conviction. I wouldn't recommend starting selling out of fear and panic. This isn't happening for the first time. Remember, a long-term investor always wins, the CEO of CoinDCX said. He further said, the financial markets are behaving irrationally these days. It's not just crypto. The impact has been seen around the equity market. Ashish Singhal, co-founder and CEO of CoinSwitch, said, While it's hard to predict which way things will move in the short term, in the long term, I remain bullish about the industry's ability to innovate and create value. Do your own research. The CoinSwitch CEO has added, "Your actions should follow a sound assessment. Don't buy because others are. Don't sell because others are. Do your own research." A massive sell-off in cryptocurrencies wiped over $200 billion of wealth from the market in just 24 hours, according to estimates from the price-tracking website CoinMarketCap. The broad plunge in the crypto complex, driven by the collapse of the Terra USD stablecoin, hit primary tokens hard. Ethereum, the world's second-largest cryptocurrency, tumbled nearly 15% today to $1,700, its lowest since June last year. Unlike previous sell-offs in broad financial markets, when cryptocurrencies have been largely untouched, the selling pressure in these assets this time has undermined the more general argument that they are dependable stores of value amid market volatility. Meanwhile, a senior watchdog official has said that global market regulators are likely to launch a joint body to better coordinate cryptocurrency rules within the following year. Top 3 coins to buy in the dip. We've picked out 5 cryptos that are worth watching right now. These cryptocurrencies appear to be significantly oversold during the May crypto crash, and aggressive investors could be rewarded for buying while the rest of the market sells. Number 1. Lucky Block. Lucky Block is the official cryptocurrency of Lucky Block, a play-to-earn crypto game that offers a daily crypto giveaway to players. The platform gained immense popularity when it first launched, becoming the fastest crypto project to reach a $1 billion valuation. Now, Lucky Block is worth slightly less than when the coin was first launched. The slide predates the current crypto panic. Lucky Block has been steadily losing value since hitting an all-time high in February. Right now, the token is off its high by around 90%. That slide could end soon, however, and Lucky Block may be an undervalued cryptocurrency. Lucky Block is starting its daily giveaway in mid-May, which means that Lucky Block token holders will start earning daily rewards. Instead of holding a token that has promised value in the future, Lucky Block investors will receive crypto income every single day. That's very likely to increase demand for this token. On top of that, Lucky Block has demonstrated that it has more than one innovation up its sleeve. The platform recently announced an NFT game that offers players a chance to win $10,000 every day. The sale of NFT for the game alone could bring in $15 million in cash for Lucky Block, which the platform can use to build even more fun in the future. Number 2. DeFi Block. DeFi Coin is the native cryptocurrency of the DeFi Swap decentralized crypto exchange. The coin has seen a lot of volatility, in large part because DeFi Swap was running behind on launching its exchange. However, the deal was finally found earlier this month, and the price of DeFi Coin skyrocketed more than 500% overnight. Since then, DEF has been shedding value once again. The coin is now trading at $0.343, down nearly 40% from its recent high. It's not clear if a bottom has formed yet, but it seems likely that the price will stabilize or reverse once speculation ends. When a bottom does form, DeFi Coin represents one of the best value buys in the crypto market. That's because DeFi Swap designed this coin to encourage long-term investing. There's a 10% fee every time someone sells DEF, so there's a lot of incentive to hold onto this asset rather than actively trade it. Over the long run, that should limit supply and push up the price. Number 3. Tikka. Tikka has been insulated from the May crypto crash because it hasn't launched yet. This cryptocurrency, offered by Q Wealth, is expected to launch sometime in the next few months. With the Tikka token, you stand to benefit from Q Wealth's wealth management platform. Tikka holders will receive a share of advice and trading revenues from Q Wealth. You'll also access the venue itself, enabling you to take advantage of Q Wealth's investment management tools. From a fundamental perspective, there's a lot to like about Q Wealth's platform and Tikka. Q Wealth is well established in India, with more than $23 million in assets under management and 50% year-over-year revenue growth. The platform also has an 84% customer retention rate, indicating that its wealth management tools are at the top of their class. That's it for today's video. If you like this video, then give this video a big thumbs up and subscribe to the channel.